Alright, today's lesson is on limitations to the trial balance. Limitations to the trial balance, and the objective for this lesson, actually we have got two objectives. The first one is explain the errors that are not revealed or disclosed by the trial balance. Then the second objective is to correct all the errors that do not affect the trial balance. As we prepare the trial balance, we have errors that no matter what, they cannot affect the trial balance. We also have errors that do affect the trial balance. But for today's lesson, we'll just concentrate on the errors that are not revealed by the trial balance. So the first error that we'll look at is the error of omission. Error of omission. Now, with this error, what it means is that a transaction is completely left out in the books of accounts. It is completely omitted. Once it is completely omitted, it does not affect the trial balance. For example, we have this transaction here on error of omission. The sale of goods 95 kwacha to Davis has been completely omitted from the books. So once you have such kind of an error, how are you going to correct this? When correcting such kind of errors, we use the method that we call journalizing. So we are going to prepare a journal entry so that we correct the mistake that was made. So following this example we have, what we are going to do is this. Here is the journal. So you write the journal. So we have details, debit and credit columns. Then from the transaction, when you look at this, it is cardinal that you identify which accounts are involved in that transaction, and then see which account should be debited or credited. So when you look at this transaction, the sale of goods 95 kwacha to Davis, we have got the sales account which should be credited. Then we also have Davis account which should be debited. So you start with the accounts to be debited. So we are going to write Davis, you debit 95 kwacha. Then when recording the accounts to be credited, you should leave a space here. So you write sales like this, then credit 95 kwacha. Once you have done this, you should now make a narration. Okay? So the narration in this case would be bin correction of error of omission. Then your journal is done. When you have done this, it means you have corrected the error, because you are going to open Davis account which you have a debit entry, then the sales account that is going to have a credit entry. That's of omission. Then the second error that does not affect the trial balance is the error of commission. Okay? Error of commission. Error of commission. With the error of commission, what happens that with this one, you make an entry to a wrong personal account. You make an entry to a wrong personal account. And this usually arises from the mistake of having similar names, names that are similar, names like Mwembe, Mwemba, okay? So you include an account that was not in existence. You never conducted a transaction with that person, but when recording, you include such an account, okay? An example that we have for error of commission is a purchase of goods 400 kwacha from C Musonda was entered in C Mulimbi's account. A purchase of goods 400 kwacha from C Musonda was entered in C Mulimbi's account. Now, when you look at this transaction, since a purchase was made, so you should have the purchases account, then you should also have C Musonda's account. Okay? C Mulimbi's account was not involved. But what happened was that it was C Mulimbi's account that was opened. Since this account does not exist, we should cancel this one and open C Musonda's account. Then we should also have purchases account. So when you look at the normal balances for the purchases account and this one, the purchases account should have a debit account, a debit balance. Then you see Musonda. This one being a creditor should have a credit balance. Okay, so it means C Mulimbi's account was credited, and to cancel this one, we should do debit this account. Okay, when we debit this account, then we credit C Musonda's account. In that case, it means we have completely removed Mulimbi. So this is how we can do the correction. So you prepare the journal. The journal. Okay, the journal. So always we start with the account that should be debited. So in this case, we are mainly concerned with these two. We want to cancel this one and open C Musonda's account. So since this one was credited, and to cancel it, we must debit. So write C Mulimbi. Debit this one with 400 kwacha. Then we want to open C Musonda's account. C Musonda. Okay, so we credit C Musonda with 400 kwacha. Okay, then you make a narration again here. Bin correction of error of commission. Okay, so when you have done this, it means the correction has been made, because C Mulimbi will be completely removed. Okay, we won't have this account, but we're going to have an account for C Musonda, which will be on the credit side. Then the purchases account will be debited. All right. Then in the third error that does not affect the trial balance is the error of principle. Error of principle. So when you ask about the error of principle, this is where a mistake is made with the class of account. Okay, if you look at the classes of accounts, we have got two classes of accounts. We have got the personal accounts and the impersonal accounts. So under personal accounts, we have the debtors and the creditors. Then in personal accounts, we have got nominal accounts, real accounts, okay? And when you look at these accounts, if you are supposed to record in the personal account, but you make a mistake, you record in the, for instance, the real account, you find that in the personal account, if you recorded in the debtors account, it has a debit balance. And if you recorded in the real account, for example, an asset, it also has a debit balance. Because of such things, the trial balance will not be affected. Okay, we have an example here. The purchase of machinery 800 kwacha is entered in the purchases account. So as I said, if you look at this, machinery account is supposed to be opened here. Okay? So when you open a machinery account, it has a debit balance. Okay? But what mistake was made is that it was entered in the purchases account. If it was goods that were purchased, yes, goods we are supposed to record in the purchases account. But a machinery is an asset which is meant to be used in the business. These are resources belonging to the business. So a machinery account has a debit balance. The purchases account also has a debit balance. So it can't affect the trial balance when you make such a mistake. But we are supposed to correct this. So how do we correct this mistake? We open a journal entry here. Okay, we can write here error of principal. Okay, so this is the journal for the error of principal. The journal. So the accounts to be debited should be written first. Okay, so machinery, you debit 800 kwacha. Now, since purchases was recorded here, and we must cancel that one, and it had a debit balance, to cancel it, we must record on the credit side. So it has to appear here, purchases on the credit side, 800 kwacha. By doing this, it means you have cancelled this purchases account, which shouldn't be there, and you have opened the machinery account, which should be there. Then you make a narration as well here. Then correction of error of principal. Okay, so this is the correction that you make for the error of principal. Okay, now we move on to the fourth error that does not affect the trial balance, and that error is the compensating error. Compensating error. Okay, so compensating error, you can write here compensating error. This error, what happens is that when you make mistakes with the recordings in the books of accounts, these they cancel each other, okay, or compensate each other. How do they cancel each other? For instance, we look at an account that has a debit balance. Now, if this account has a debit balance, then you happen to record an amount which is more on the debit side. Then another account which has a credit balance, using the same amount that you recorded in the other account which had the debit balance, you also record on the credit side. You increase by the similar amount. It means those two accounts are cancelling each other. Okay, if you have a 500 kwacha, for instance, in the purchases account which has a debit balance, then you also add a 500 kwacha in the sales account which has a credit balance. It means those two accounts have cancelled each other, or they have compensated each other. Let us look at an example here so that we see how we can correct such kind of an error. The sales account is overcast by 200 kwacha, as also is the wages account. Okay, let me just do the correction here. Okay, so the sales account is overcast by 200 kwacha, as also is the wages account. Now, when you look at this transaction, the wages account has got a debit balance, whilst the sales account has a credit balance. Okay, so the two accounts have an overcast. Okay, meaning that they have been increased by 200 kwacha. Okay, so they are cancelling each other. So we need to make entries on the other sides of these accounts so that we remove that amount that has been increased. So to make a correction for that one, this is what we can do with the journal. Okay, we are preparing the journal here. The journal. Okay, so we start as usual with the account that needs to be debited. Since the sales account has its normal balance on the credit side and it was increased by 200, so for us to reduce the sales account by 200, we need to debit the sales account. So we start with the sales account. Sales, you debit 200. Then the wages account, which has a normal balance on the debit side, for it to be reduced, it has to be credited. So we record it on the credit side. Wages credited with the 200 kwacha. Okay. So we should also make a narration here, and the narration would be like bin correction of error of compensating error. Okay, thank you. So that is how we do the correction of that error. Then we go to the fifth error, that is error of original entry. Error of original entry. With the error of original entry, what happens is that the double entry is observed. Okay, the double entry is observed. The only problem is that even though you have observed the double entry, it is observed with a wrong figure. Okay, from the word go, you are using a wrong figure. So since you are using a wrong figure and double entry system is observed, it will not affect the trial balance. The trial balance will agree. Okay, so since a wrong figure was used, we need to correct that mistake. Okay, so let us look at the example that we have here so that we see how we correct such kind of mistakes. So the example we have is a sale of 98 kwacha to Mwamba was entered in the books as 89 kwacha. Okay, so we have seen here the sale was 98 kwacha. However, what was recorded in the books was 89 kwacha. Okay, and if you check here, it means in Mwamba's account, 89 kwacha was recorded. In the sales account, 89 kwacha was recorded. Now, if we look at these two figures, we can see that there is a difference between 98 and 89. 89 is an undercast. Okay. since 89 quarter is an undercast, we should find the difference between the two, okay? So the